Hello all and welcome back. I hope you're all doing really well. Thank you again for the love and support on yesterday's video. Seriously appreciate it. If you aren't subscribed to this YouTube channel, however, make sure you are and make sure you've got notifications turned on. I will have a lot of videos in the coming weeks as the DEXs and decentralized applications built on top of Hedera successfully move throughout their testnet phases and begin to roll out on the mainnet itself. I will be doing full walkthrough guides on how to utilize the DEXs, as well as inform you guys about the potential risks of using different features on those DEXs. For example, the use of liquidity pools, what impermanent losses and how that may affect you, as well as best practices for navigating those, as well as some tips and tricks on how to maximize your returns if you wish to do so by leveraging things like HBAR if you're already using the STADER liquid staking platform. This video is going to cover some of the other use cases on top of Hedera, as well as some crypto news. So let's jump straight into that one. If we take a quick look at the crypto bubbles, it's something I wanted to mention in this video because it's still important. LUNC or Luna Classic and USTC or UST Classic from the Luna chains are seeming to pump again. They are having a bit of a relief rally. I still stand by my points previously. Do-Kwon realistically cannot be trusted, and neither can any of these chains. They still have their inherent flaws with them, and I would stay well clear of any of these products themselves. You may be tempted by that feeling of FOMO or fear of missing out as you see the prices rise, particularly against the backdrop of the rest of the markets in red at the moment. However, it is highly likely that this will be temporary and these will head back down to zero. There'll be very little support for these chains now, particularly as that fork has occurred, the sort of hard fork. And these are two sort of separate projects now, as well as their name being severely tarnished anyway. This is not something that I believe anyone should really be touching. So if you are uninformed, make sure you do some research on these projects if for some reason you are willing to effectively throw money away. Looking at the rest of the markets, we can see it is red pretty much across the board, still averaging into those positions, and I'm still acquiring a lot of HBAR. Quant and Chainlink as well are two on my list at the moment that I am really trying to build bigger positions in. If we talk about liquidations in the markets, Voya Digital has just issued a default notice to 3AC, so that's that Three Arrows Capital, for failure to repay a loan of 15,250 Bitcoin, as well as 350 million USDC. So highly likely is now that 3AC or Three Arrows Capital is going to continue to move throughout, further liquidations and potentially insolvency will be on the cards, which was obviously, being toyed with weeks prior as Bitcoin's price continued to fall. However, this is becoming more and more of a likelihood to happen. What this means for the general crypto markets is we could see further pain over the coming weeks as these potential liquidations begin to occur. Stuff could be sold over the counter, which could significantly cause price impacts to Bitcoin and the overall cryptocurrency markets. That being said though, Bitcoin balance on exchanges is at a 3-year low, which actually spells bullish sentiments for Bitcoin itself. So while the cryptocurrency market cap sort of has just surpassed $1 trillion, this article is just a little bit out of date in terms of the market cap, the chart showed that the balance of Bitcoin on crypto exchanges is the lowest it has been in years, indicating that more people are pulling the coins off and holding them, as well as suggesting that preparations are on the way for a future bullish run. So this is supported by statistics from Glassnode, which we can see here, the BTC balance on exchanges. Traditionally, the change in the amount of Bitcoin held on exchanges has reflected the market sentiment. In fact, Bitcoin's price movements have historically gone in the opposite direction to that of its amount stored in wallets of known exchanges. A lot of this as well may be being driven by the fact the safety of the exchanges has been called into question with liquidations and issues, for example, on Celsius, Coinbase with their job cuts, and stock price movements recently have been very poor, and there's been concerns over them as an exchange as well. Potentially a lot of people are just following the age-old advice of making sure they own their own keys to their crypto, and this could be driving that stat. So it is something to take with a pinch of salt. However, it is potentially bullish. We can see here, if we read through the rest of this article, assets on exchanges tend to decrease if there is a higher buying demand, which means that more participants want to buy rather than sell. Also indicates that holding mode is on and possible preparations for a future bullish run may be underway. Following this logic, a price increase could be expected as the trend of lowering Bitcoin balances on exchanges continues. It is also worth noting that several days earlier, Finbold reported a massive $2 billion worth of Bitcoin flowing out from exchanges in 1 week, which means that the trend was starting to take hold. At the same time, Fairlead Strategies founder Katie Stockton believes that a relief rally might be expected in the near future, although muted due to the downside momentum witnessed across the market. So we may see some localized relief rallies for, say, Bitcoin and Ethereum. However, obviously the macro sentiment across most of the markets is still the same. It's still fairly negative, still inflationary pressure, as well as interest rate pressure to try and combat that inflation. Not only that, we see the Bitcoin dominance continuing to increase as well. So there could be more pain for altcoins in the coming weeks, particularly if that Bitcoin dominance continues to accelerate. Covered obviously in the last video talking about that $2 billion venture that Goldman Sachs have been looking into to buy up some of the debts from Celsius if they do begin to go into liquidation. It's interesting to say as well what their crypto journey has been, and this reflects actually many institutional grade investors as well as long-term veterans of equities markets. 2017, Bitcoin is a vehicle for fraudsters. 2018, Bitcoin's never coming back, it's crashed, it's worthless. 2020, Bitcoin is no longer a real asset according to them. 2021, Bitcoin is now going to be offered to our clients. And 2022, we're now raising $2 billion of capital to buy Celsius assets at a massive discount so we can earn a really high rate of return because cryptocurrency is relevant. So, as I've said before, they'll push one narrative in the media and the papers, and then they'll be doing something else along the sidelines as they're looking at potential opportunities throughout the markets. Classic phrase that I use is the writing is on the wall. You make sure you do what they do and not what they're saying. They will say things that push headlines. A lot of the time as well, there may be some conflict of interest for them. They can push out analyst reports saying Bitcoin is going to zero to try and shake the markets, make retail exit their positions, and then effectively scoop those coins up on pennies at the dollar value. This is a tried and true method of many institutional grade investment vehicles, not only in cryptocurrency, but in highly regulated equities markets. So just be aware of what they're doing. And this is why I seriously preach that you not only understand and are constantly researching what you're holding, but also that you have conviction and a long-term horizon on those projects so that you can weather the storm when things really do get bad. So right now, for example, I'm not particularly afraid of what's happening in the crypto markets. I am sensibly invested with portfolio sizes which I can lose. I don't want to lose, but I can lose and I can sleep at night. And that is a good approach to take. There is no solace to be had from going to bed or having sleepless nights because you are seriously worried about another 50% drop from where we are. So just make sure that you are fully comfortable with what you're doing in the cryptocurrency markets, as it is very volatile. Talking about that though, we have got some more adoption and breaking news that the Central African Republic to launch a crypto hub on the 3rd of July. This is obviously bullish as well, partially or indirectly for Hedera, as we have seen some CBDCs via MTech's sandbox environment, which is obviously utilizing Hedera. We may see more of those African nations partner with MTech and then indirectly partner with Hedera and use their services to help facilitate some of this crypto revolution that we're seeing in these non-OECD countries, which is becoming ever more prominent. So some great news there across the board for cryptocurrencies. Right, transitioning across, let's focus on some Hedera related news, as there's been a few different updates about some more major use cases, and I wanted to touch on some of the other ones that are outstanding. So Ping Identity, Microsoft and Workday have collaborated to develop verifiable credentials with JWT interoperability profiles. So Ping Identity has partnered with these to demonstrate the interoperability of wallets, digital credentials, and verifiers based on multiple standards related to verifiable credentials. This work is forecasted to result in generally available products from these providers to be interoperable for customers to implement for various use cases. So some of the big names there are obviously Microsoft and Workday, and many of you may be asking who Ping Identity is. Well, Ping Identity is actually a service built on top of natively Hedera itself. So we are basically seeing big tech partners like Microsoft and Workday, tech titans, partnering with Ping Identity to leverage Hedera, again indirectly, to build a verifiable credential service that these companies can then roll out. So Ping, Microsoft and Workday jointly developed a profile known as the Verifiable Credential JWT or VC JWT interoperability profile. The profile contains several specifications and describes how to present a verifiable credential issued by one vendor to verify a software from a second vendor via a wallet from a third vendor and complete a successful verification with privacy-centric data sharing. So of course, this is trying to obfuscate that privacy or private data but at the same time making sure it's verifiable. And obviously this is going alongside many different regulations, for example, GDPR and private data, record holding periods, etc. Lots of protected information out there, but it still needs to be verifiable in a safe manner. The work is part of Ping's Personal Identity Initiative, a suite of products and services that deliver digital credential-based communication of verified information via personal identity wallets. Ping's customers have high-value use cases that can be effectively addressed using the personal identity and verifiable credentials approach. Ping is actively developing prototypes and pilots with leading customers to further flesh out the approach. So the base specifications are things like OpenID Connect, decentralized identifiers, loads of other stuff in there as well. I will try and leave this article linked in the description for you guys to read at your own leisure. However, it's obviously very great news. If I flick over to the Reddit article that this was actually featured in, I just wanted to read out this first comment here. So Workday is like ServiceNow but with different needs. Large company uses Workday for SSO single sign-on and other things behind the scenes. Even ServiceNow and Workday can be integrated for a complete HR solution. Ping Identity have close ties with Hedera, and a number of Hedera core members have previously worked there, Mance being one of them. Paul Madsen as well, who is working part-time as the head of identity at the HBAR Foundation, is also currently working as a sensor technical architect for Ping Identity, which is obviously a very senior role. Video link as well that showcases the new identity system looks like using QR codes. And then Ping Identity is also much larger than people think, currently managing 3 billion identities of over 50% of Fortune 100 companies. So this is not a use case to sniff at all. You've got tech titans on board and a huge existing client base, all within Fortune 100 companies. And of course, massive amounts of integration directly with Hedera. Great use case nonetheless. Many of you will be aware of the Coupon Bureau, something that I've covered on the channel loads of times, as it is, again, another huge use case for the Hedera network, and aims to bring potentially billions of transactions across to Hashgraph. 256 billion coupons were issued by them last year, according to this video, which has been published on Reddit here. And again, if you assume one transaction to issue, i.e. one transaction is one clipped coupon and one transaction to use, that means the Coupon Bureau use case could one day hit more than 500 billion annual transactions, aka more than 1 billion transactions a day. So again, this is another use case, another huge use case, which is obviously being developed behind the scenes. And the timeline of events for this is the Coupon Bureau would like to go live on Hedera in July. So hopefully within the next 4 to 5 weeks, we will see this huge use case deploy fully on top of Hedera. Check out some of the other videos on my channel as it talks about some of the partners the Coupon Bureau has, but they are the likes of Family Dollar Tree stores, Walmart being another big name brand over in the United States as well, and plenty of other companies they're working alongside that they issue and maintain coupons for. So a few billion transactions here, a few billion transactions there. Did see some comments as well talking about @𝗏𝗏.io and when that was meant to launch. So I believe @𝗏𝗏.io had an initial statement saying that they wanted to launch in June. Now, of course, we're pretty much at the end of June now, so we can only assume that those deadlines that they put on themselves have kind of fallen through, and maybe we'll see some updates for @𝗏𝗏.io in July. Now, it is worth saying that this is not responsible, or this isn't the responsibility of Hedera themselves. Obviously, Avery Dennison are developing the @𝗏𝗏.io platform utilizing Hedera, and it's down to their discretion as to when they will be dropping the product on the mainnet effectively. We have seen some high testnet numbers recently. Some of that could be down to @𝗏𝗏.io use cases, or certainly the past couple of months, we saw some very high testnet numbers, which could be this platform. Unfortunately, it doesn't look like it's going to be going live in June, but nevertheless, it is still being built behind the scenes. So that's a couple, potentially 3 billion transaction use cases that we could see drop on Hedera over the coming year or so. Some of them sooner than later. For example, Coupon Bureau should be next month. I wanted to touch on this as well, which is a interesting read about a bot which is known for outperforming crypto markets has unveiled its altcoin selection amid the wild Bitcoin and Ethereum price action. I know some other people have covered this previously, as it is sort of 5 days old now. However, I thought it'd be well worth sharing with you guys as well. What we can see is this chart that the bot produced about how it's weighting its portfolio. So Bitcoin itself, it's overweighting drastically, probably because of the price action recently. USDC coin as well, ironically. So at the same time, it's taking a bit of a hedge position. The answer frequency of 0.6. Ethereum, again, mainstay of probably most portfolios, 0.4 on the answer frequency for that. So it's overweighting in the green bar. You can see there. Solana, interestingly, which is something that I would not tend to agree with due to the potential, there's severe risks effectively with the Solana protocol itself. I've covered that in quite a few videos. You can check those out on my channel if you do wish to do so. If I scroll along though, however, the interesting one is of course Hedera. So this bot is known for outperforming the market, and it's allocating roughly 20% overweight vote to Hedera Hashgraph or the HBAR token. So we could see some nice price action in the future, particularly if this bot's track record continues to play out going forward. Obviously, this is not something that you should be using as a justification for buying HBAR. You should obviously have conviction and understand what Hedera are doing themselves, but this is nice to add a bit of weight and credence behind what may happen in the short term, particularly over the next sort of 4 to 8 weeks. So nice little one that I thought to share. Starting to round up the video then, let's just quickly look at another HBAR Foundation announcement. So the House of Cycling.io is being built on Hedera with assistance from the HBAR Foundation. The joint venture with Reality Plus Web3 and Immortal CPH is bringing the cycling world into Web3, enabling a brand new experience for cyclists and fans alike. So House of Cycling will leverage the Hedera token service to create a fantasy game, marketplace, token, and much more, an entire fan universe all connected by Hedera. The first phase of the project will be a prize draw of pro touring bikes, memorabilia, and vouchers, which you can enter via the House of Cycling.io website. If you are located in Denmark, you will automatically get tickets to the event starting on the 29th of June, and you can claim your pass again over on their website. If I do jump across to their website, we can see what it's all about. Obviously cycling, as they mentioned. But again, interesting to see another sort of company or enterprise looking to produce Web3, metaverse, NFT, and gaming related content on Hedera. Said before, Hedera seems to be the go-to for many different types of decentralized applications. CBDCs, remittance payments, it's been shown it can do. You've got decentralized ecosystems, as well as things like Metaverse and Web 3.0. Pretty much anything can be built on Hedera with enough time. Rounding up the video then, STADER Hedera V2 is going live tomorrow, the 28th of June. To make sure you have a seamless experience using it, we'll be upgrading the dApp behind the scenes, and then you can make a note 1:30 p.m. to 7:30 p.m. UTC. The dApp will not be accessible between these times tomorrow as they upgrade the app, and then afterwards you will have all those V2 features which will allow you to unstake. I will run through that tomorrow in a video showing you guys how to unstake either 100% or a portion of it if you wish to do so. Don't forget there will be a 7-day unbonding period for various different reasons. It's got nothing to do with the fact that your funds won't be available. It's just to try and not only offset that demand, but incentivize people to not enter and exit pools very quickly, as that obviously cause issues with people abusing the platform. So hopefully that makes sense. If you guys did enjoy this video, make sure you drop a like, leave a comment if you've got something to say. I do try and get round to them, or as many of them as I possibly can. Until the next one, I'll catch you then. Cheers.